Wow, this might be one of the craziest days that we've ever seen, but is it actually real? A sea of green, the number one trade ever to go through on the S&P 500 largest fund, and semiconductors back to what we call role reversal. In today's video, we take a look at the dark pools, what Wall Street was up to, and some of the leaks that seem to be coming through. On top of that, the volatility crush, the bonds market still freaking out in many ways, and of course, whether this can even be considered real. Guys, we've filled gap one. Can we do number two? There is a lot to discuss. Let's go through stocks, commodities, and cryptos together right now. This one's not to be missed. This is wild. Well, welcome back everybody to one of the craziest days we've ever seen. My name's Tom, and in today's video, we'll be going through the latest macro, the dark pool trades of course, Wall Street. These are absolutely massive near the close. And of course, what's going on in the tariff and macro world. If it's your first time here, remember to subscribe and smash that like button. Wow, these markets are not going to get any less volatile throughout 2025. I'm telling you that. Let's just look at the facts. The United States of America just put 125% effective tariff immediately on China, of course, the second largest economy in the world. On top of this, we saw, of course, 75 countries that didn't put reciprocal tariffs on get those reduced or paused for 90 days. And of course, it went back to 10%. Now, the market celebrated this like it was the greatest thing ever, but really was it? Well, according to Peter Berezin, well, maybe it's not so good. In fact, if you actually add them all together, we still have an effective tariff rate that is very, very high. And this is the problem. I think the markets might be getting ahead of themselves. And with volatility, like you've just seen, as we'll show in a moment, this could be part of what we call a dead cat bounce. Now, why was this deal done? Well, my guess is it had something to do with yields. We saw, of course, bonds getting sold off, including treasuries, and we saw a massive spike on the long yields across the board. The 10-year, the 20-year, and the 30-year were all spiking big time. And this had capital markets worried, across the board. Basically, spreads are still blown out. We're waiting to get those updated numbers. We will bring them to you as soon as we get them. Follow us on X and the links in the description down below, because this is a minute by minute, as we knew, second by second kind of market here. Speaking of minute by minute, take a look at this one. This is going through over on X here. And basically, it is two reports. And you can see the times here, 73 minutes apart. The first one, 65% chance of a recession this year. The second one, 73 minutes later, 45% chance of recession. Yeah, this is a wild market that is moving at incredible speeds. Speaking of speeds, according to a post over on Basel that I actually linked in the X account, and obviously that has been reposted, you'll notice here that we have some unusual activity in the Unusual Whales platform. And it looks like it was before, and again, this is based on the evidence that I'm getting here, before the announcement. Somebody may have known, guys. That was a huge amount of calls suddenly coming through on volume. And of course, then the markets went up ballistically as we entered into positive gamma and a huge squeeze event. Now, just to remind everybody, we've still got earnings coming through at the moment. And obviously, they're all starting off very, very soon. So make sure to subscribe for that as well, because this is just going to add fuel onto the already existing volatility, as we see, I believe, a lot of companies not being prepared to give forward guidance. I wouldn't be surprised at all if we're not getting forward guidance soon. Let's now talk the stats. So Mark here has come out and basically done some good statistics here. And basically what this is when we gain over 9% since 1955, what traditionally has happened over the next coming sessions. And you probably can't even see it here because you think, wait a second, it keeps going down. Well, that's the problem. During these flash crashes, markets will rally and dump insane percentages. And that's the problem with an extreme volatility of the VIX being well over 30 at this point. We don't know exactly whether markets are going to be super happy or super upset about the upcoming information that we end up finding out. For now, though, we do know tariffs are still here, and there's no doubt that damage is still being done. So what do you guys think in the comments down below? Is this a dead cat bounce, or is this the real deal? We'll know soon with price structure, but just to be aware, it doesn't necessarily mean the markets are out of problems just yet, based on at least that piece of evidence. Now let's talk about something that is absolutely insane. And I saw this, it almost floored me, and I don't get floored easily, as you guys know. Number one, biggest trade recorded on the S&P, the SPY. This is the number one ETF with the number one trade right at the close of the day. Wow. Wow. That's a big trade near the close. Now, could it be a sell? It certainly could be, considering it's happening at a supply level, as you can see here. And it is a big number. So if we fill gaps, if we see price action, day traders will be coming out in big time to play here. And it wasn't just there, a sweep, which basically means a dark pool sweep, a very fast transaction near the end of the session, was placed through on VOOG, which is the Vanguard S&P Growth Fund. That happened right near the close as well. And it is the biggest recorded. Yeah, it's just mind-boggling numbers that are there in terms of those two big cluster trades. So why do we say, wow, this could still be absolutely up, down, and around? It's because, as you can see here, based on Subutrades data, that's what tends to happen. The S&P 500 saw a 97% plus of stocks go up over today. And that basically triggers in what we call extreme volatile events. Now, some of those sometimes go ballistic, and you can see here 1 year later, maybe the stats aren't so bad. But this tends to happen in significant credit style events. And it can get worse still. 2 weeks later, you can see here a lot of the statistics, only 44% of the time the markets are up. And this is because whatever reason we're down here for, and of course, in this case, it's tariffs, things could escalate or de-escalate. And that's the million-dollar question at this point. Which way will we go? Statistically, it is a little bit worse than a coin flip when you're looking at 2 weeks later. Here are the stats here in terms of each day, so you can kind of see what happens and how things generally play out. And look, again, the stats are generally okay for maybe the second gap fill, which we'll look at in a moment. But in general, again, when you're looking at 4 days later, 1 week later, 2 weeks later, specifically that 2 week date, that's where the stats get a little bit worse. Now, what are some of the good signs? As we've been arguing with the structure down near the 4,800, 4,850 zone, it was just oversold. Someone was going to give. The markets were absolutely pummeled. We saw that technology stocks, 0 of them were above their 50 EMA, very rare. When that's happened, we've tended to see close to bottoming markets. Again, notably here in 2022, the market actually made a lower low before actually recovering. Again, these are the types of things that happen down here. Baselining, even if you look here back in 2018, the tariff stuff over there, I actually load this so you can see it. You can see here the little market, and the market went lower before rallying up. So again, depends on the escalation, de-escalation, but I would say that China will respond by matching, if not upping tariffs. At least that could be the bad news story of the next 24 hours. It is a constantly moving thing. You can see here Seth Golden with the ROC indicator from the VIX. Again, markets went ballistic the other day. It obviously went worse than this. But these are the types of times that you get these kind of oversold markets. And these are the types of things that we look for. Another thing we look for is mass panic. And of course, mass panic comes in the idea of revisions, which of course we saw S&P 500 targets go down heavily, like 1,000 points down on the year 12-month targets. And we also saw Tom Lee come out and he literally said, oh, I didn't think it was going to get this bad this quickly. And all of those things tend to culminate in what we would call max fear. On the same side of this, we can see here the volatility index. When you get these types of massive VIX crashes along with everything else, 3 consecutive closes above 45, traditionally it's in these volatile periods where we get these whiplashy style markets. And these can be the most painful for investors and traders like us. Obviously, some of you are probably celebrating these huge moves each way, but you've got to remember it does become a little bit of a gamble fest. So you've got to remember it is not traditional replicable strategy. It is literally playing the stats and the odds of the chicken and the mouse, or something. I don't know, the cat and the mouse. What am I talking about? Chicken and the mouse. You guys know what I'm saying, though. It is absolutely that kind of gambling period. You've got to be careful out there. Risk manage, risk manage, risk manage. I know it's a boring thing to say, but you can see the replications here. Down 15% in 2025 now. What, again, statistics are that we often do follow a pretty bad curve. As you guys can see here, only 3 of these times we've not been in recession. 2022 was obviously a lot better, and we ended up recovering up. We did break some structure, though, that we've been showing that is not so fantastic. And you can see here when the VIX is above 45 for 3 days in a row, this vol up, down, and all around can happen. So yeah, the stats are that things can get wild, although, of course, de-escalation can happen quickly. Some other signs in the future that you may want to look at, SPX, bullish percent index on both the NASDAQ and the S&P. Both of those hit low. I post those usually over on X if you're interested. And forward PEs obviously hit 10-year averages across so many other sectors. They've now gone back up, but you can kind of see here what happened. We've gone down in technology and spiked back into this area. So that's a huge PE ratio change as well, just over the last 24 hours. It is unusual times. Now, has the damage been done? I'd like to see your comments down below on this one. I'm thinking that we've lost buybacks this year. Basically went from over $1 trillion of buybacks, probably down into the billions, hundreds of billions. Companies are going to hold on to some of that cash. I wouldn't be surprised to see this create a bunch of job losses, which was already starting to happen. And obviously the Fed may need to come out as well. So it's going to be one of those things that's news driven for now. And then hopefully we can get back into technicals and we'll see how that goes. Obviously, we cannot ignore the 1930s paradigm here. We cannot ignore the 1960s or the 2000 bubble. All of those will need to be tracked moving forward. We will do that together. And as you can see here, even more indicators the other day of oversells. One of the big ratios that we often do use, which is copper gold, that's been tanking, and that's really been tanking with oil. So what's that showing you is it's showing you that there is a significant stress in the system in terms of growth, and that may need a lot of stimulation based on liquidity. I'm looking for injections in the market, and we just haven't seen that liquidity come back in yet. Remember, we are now day 6 or something, or maybe 7 above the VIX 27.3. That's starting to get dangerous. You know, we're still tracking that. Once we hit over 11, that could go bad. And do remember, while the first quarter after all of this madness that we've just seen so far in March happens, yeah, that can recover. The problem is the next couple of quarters. You know, it's going to be a very cautious market this year as we start to see structure balance. Now, I didn't just stop there when it comes to big trades. We saw sweeps coming in one of my favorites, gold. You can see here, IAU Gold Trust. That's a huge, huge, huge position. Yeah, wow. So that's another one. Is that a profit? I don't know. Is that an entry? Obviously down here is probably an entry sweep. But yeah, it's still on gold. That's actually where if I was trying to sell it and I was using technicals, I'd maybe do that. So it would be an interesting one there. And we'll see how that plays out. And we saw big trades across the board. Netflix, Nvidia, Apple, Microsoft. It didn't matter what you were looking at. Near the close, there were just trades everywhere. And that could suspectedly be profit taking. Now, why could it be profit taking? Well, take a look at this. Semiconductors are up 17.16% on the day. Yeah, that's some big numbers. That's big numbers. And the thing that's crazy about it, when you think about it, was it was down at one point there during the session. I can't actually see this line exactly, but it seemed to be down like maybe 1-2%. So that's one of the biggest switches of ever recorded in history, ever. You guys are witnessing history. It's nuts. And then when you look over here, you can see here that we've just wiped from being down semiconductors, probably about 16% over 5 days, to only down 1.5%. That was a risk on for sure, but that's the thing. Those look at those stocks. They are the ones that are always going to find the gains first because they're the ones that are most heavily sold. To get a recovery in markets, you have to see the leaders. Semis, tech, consumer discretionary. They were there today. Defensive's obviously well behind them. That is perfectly normal. And of course, is this a normal time? No, but we did see those big trades. Now, what's the good news? The good news is we filled gap 1. Okay, so well done. That's pretty cool. The bad news is we start to enter into the structure. So basically between here and the second gap, which is about 56.70 area, this is where the danger zone is for markets. And obviously with those big trades, if we do start to create negative structure here, which we'll see over the next 24, 48 hours, then we will be on top of that one. If you have a look here at the US 500, you can see that the market obviously has recovered significantly on the futures market action. We are talking a 14% switch on US 500, like a 17% switch on the NASDAQ. These are, pretty traditional with these types of things. And you could argue, of course, the doubling bottom nature of this. Now, if you're going to argue the doubling bottom pattern, then what you'll do is you'll take the distance of the pattern and you'll proof it. Now, this is where the magic comes in, and that's why I wanted to mention this. Have a look at that level, 56.70. Okay, so the market is proofing towards, let's just go back there and have a look, the gap fill. Does that mean it's going to happen? No, but it is an interesting proof nonetheless. And of course, we must be paying attention. Let's now look at the puts. Someone entered a monster position at 5,500, huge put at 5,500. Obviously, The puts that were all sitting down below, those guys are probably going to get wiped out, and then they're going to lose their money on those. But you can still see here when it comes to the April expiration, take a look at that, just like swiping puts everywhere, all the way up to 5,700. So still negative gamma across the board. Interesting level here at 5,500. We're 50 points underneath that at the moment. So maybe the markets will try to regain that level. That could be arguable, at least anyway. And you'll notice that when we go to the next session, which is Friday, you start to really get a lot of strikes all around these key levels. So yeah, some interesting stuff there indeed. When we move over to NVIDIA, went positive gamma, hit 105 plus, rallied, came back to the most traded zone. This is probably the most important level, 115, 120. And Tesla, 220 seems to do it again. 220 to 250. This time it went more ballistic and it was at 272, which puts us at the 280, 300 as a possibility here if we continue to rally. Yeah, some stuff that is pretty wild. Let's now jump into the lead indicators. Firstly, the VVIX crushed, which is a good sign for market traders, although it doesn't necessarily mean that we're in, everything being all great and everything like that. I'm waiting for updates on the bonds market. So of course, I'll show you that soon, guys, in the next video. But let's have a look at the US 10-year. US 10-year obviously spiked. I have a suspicion that this was a huge deal in the markets because what happened was we took a new high. We went above 4.4, and that was around when we started to get these announcements coming through. These markets were panicking, and we started to see bond spreads blow out. We obviously saw treasuries blow out. And a lot of you guys are wondering, why are treasuries dumping off? It's because central banks are selling them. And on top of that, we saw yields spiking, which obviously hurts treasuries. So we've come back down to that traditional bull zone. We saw a spike off that, but there seemed to be a lot of moving parts here as the bonds market started to kind of go, you know what, I'm not too happy about this at all. And maybe they did a little bit of, well, what's going on here? And then everyone else was blinking and saying, oh my goodness, things are going bad. Swipes underneath the April lows, obviously huge gains here in high yield junk straight away. And this is all as a ramification of course, the debt markets freaking out. When we have a look at the percentage of stocks above the 200, obviously this is always, well, not always, but it's traditionally a pretty good level. And so far, so good, but that doesn't mean we're out of the gates yet. And copper gold obviously stabilized, but still showing quite a lot of weakness. When we move over to the US dollar, you can see here it didn't really do much. It's just like up, down, all around. And home builders did recover strongly. They are now heavily oversold. I do not forget this chart. It's not a good chart. Remember, we know that the number one largest transaction came through here. And since then, it's been decline all day long. So, of course, we'll be paying attention to that. But gold markets recovered, obviously big sell potentially, or maybe it's an entry at the end of the session. And these were some of the best technicals. So gold and silver actually had some of the best technicals. We spoke about it in our room together. Obviously, the S&P and NASDAQ also had the best technicals. They were actually the best buys of the session. The silver position, it was up a little bit. Gold did a bit better. Obviously, the standouts were semiconductors, which we did see some strength in. We talked about that in our last video. And of course, just the basing structures on the NASDAQ and S&P. You just do not get days like this very often. I mean, I've seen a handful of them. I've been around since 2007. Obviously, during the GFC, you saw a lot. 2020 saw a lot. And then the notable ones I could think of were some days in 2022, right now, and then 2018 tariff. Obviously, the tariff stuff that came in there around Christmas. Either way, silver broke to the high. That's a good sign of recovery. Oil did bounce up. I'm just going to mention this here. I'm not really a huge fan of the oil markets at the moment, but 12% up. That's obviously another big, strong gain. Back into resistance, I would say. So back into supply there for oil. So it's at resistance. And you can see here the gains that were coming in from Tesla. So now we're going to look at that 290 being like kind of a target for a lot of people. I'm going to say, probably around, 280, 290 is where you could see this thing topping out. If it does break through, it's a double bottom. Again, that could be good structural gains. We've seen HSI, that is China, recover off the lows, not as well, but it did recover off the most traded zone. We saw the same thing happen in the DAX. We saw the same thing happen, of course, in many other markets. And I guess what I want to show here is we entered positive gamma on NVIDIA. We are not out of the problems yet. Look at this. The thing marked up, sure. It's come back to the most traded zone. Now, I always say price is everything. And the reason why price is everything is because if you buy good price or even if you sell good price, markets tend to come back to it. So we are now there. This could be decision time for the markets. Do we make a higher high and activate potentially swing traders and more positive gamma? Or is this where the sellers come back in? That is the big question that people will be asking. It's the same thing on semis. Semis actually improved in structure. This was something I was looking for. The gap is almost there. So you can see actually that semis pretty much filled the two gaps straight away. So they were so oversold and the market loved it so much that they just squeezed all the way back. And you'll notice here, it's come back to the perfect technical area where you start to have problems, which is, of course, this area in here. So we're back to supplies. We're within a few percentage points here of structuring up. We have to see what goes on. As I mentioned before, the DAX, super recovery, but the DAX probably hasn't really entered into that supply area yet. So there's a lot of synergies of a potential little bit more upside, and then we'll see what goes on. I'm not really thinking that's worth the risk reward though at this stage. What's the US 2K doing? Weaker than most. You can see here it rallied up, sure, but it did close above, but it's not quite at the area you'd expect it. You'd expect it should be at about 2,000 by now if it was following the others. And then, of course, there was Bitcoin. Bitcoin technically did a double bottom. Again, if you were going with the distance, which always is what you do in terms of proofing of patterns, you'd be seeing, well, does that make sense? Yeah, I guess it does. No swing change. Obviously, still technically downward trend. Better structure in the crypto world right now, like that, but yeah, nothing else. And then, of course, we've got the NASDAQ, which was probably the standout trade. I really liked the small time frame down here. We discussed that one. It's actually straight out of our day trading masterclass. There's some replication there. The key is replication. Find your spots, react to those spots, see the markets doing the things. Don't really be a predictor. Just wait till the market shows you some form of structure. Now what we're going to have to do is wait for structure again because we are at those critical levels of gap fills and other things. So if you want to do your NASDAQ kind of analysis, you're probably going to want to be doing this one here and look at your gap here from Liberation Day. That's 19,574. So you want to see where that fills. First gap filled, second gap, question mark. At this stage, a lot of people are going to be sitting around here and we will find, if we can, the dark pool activity. Now we still have more news coming on. We've got CPI coming through just before the market opens. Sure, that'll be a vol event. And then, of course, we've got PPI on Friday. So these are both at New York, 8:30 a.m. They are nowhere near as important as the tariff discussions, which we'll continue to see. So, guys, it brings us to the end of today's show. You've witnessed history. It is wild. Biggest trades ever recorded for the SPY. Absolutely ballistic upward movement. This is a volatility market. This is the kind of market where you do not expect 5-10% moves in a session. We already knew this when the VIX is high. This is what happens. And of course, this is paramount that we try to obviously risk manage everything that you can. What a move. I hope most of you, or I hope all of you, have done as well as you can in this situation. And of course, just remember that it's probably going to continue to heat up for quite a few weeks now, based on the statistical data. Thank you so much for watching. Subscribe, watch us in the next one, and hit those bells because, guys, there's a lot to talk about. See you for now.